Welcome back, everybody, to the Hustle on Purpose podcast. My name is GT Ikard, and today we have a very special guest, Randy Jones. How are you doing, Randy?
Doing awesome. Thank you. I appreciate the invite.
Yeah, thank you so much for being here. Just give us a quick introduction. I know you, but everybody that's watching doesn't. So tell us a little bit about yourself, what you do.
Yeah, so I work for First Community Bank here in Little Rock. The bank is based out of Batesville. It's about a $2.4 billion bank, and that's how much assets that the bank has. So that's kind of the measure of how large the bank is. Lending limits about $24 million per relationship, and so here in Arkansas, that's a good size to do a lot of everything we need to do, from home equity lines of credit, car loans, all the way up to industrial loans. So. Right. A little bit about me. I grew up not too far from here, actually, in Southwest Little Rock, and went to J.A. Fair High School. Went off to play football my freshman year and came back and started at UALR, worked my way through school as I worked for a bank, and met my wife my first semester there, and we eventually got married after we graduated and been together for 27 years.
Congratulations.
Married for 27 years. Thank you. Yeah. Very, very proud of that and the family. I've got two sons that are both in college and play college baseball. And so that's what we do in our spare time right now. I no longer get to throw batting practice. I just get to watch other people do it and watch the kids play. So, right. So I'm a Little Rock guy, grew up here. Went to college here, worked my way through banking in college, had a love for it then, and have worked in several different capacities in lending and investments. And over the past 5 years, have really built a niche for real estate, single-family real estate investment property. Yeah. And I've come a long way on that, and have a lot of good customers that have built up a sizable loan portfolio for me to manage, and very thankful for them, and also for First Community Bank giving me the resources I need to be able to help my customers too.
We'll stay away from just how much money I owe First Community Bank. But yeah, you brought up a great point when talking about the size of First Community Bank and it being really large for the market that we're in. Mm-hmm. Something that I didn't realize before that I think maybe you can touch on that'll be really helpful for people is the benefits of a local bank versus a national or international bank. Because I fell under this kind of misconception that dealing with the real estate portfolio I was trying to build, that I was going to be better off dealing with a larger national or larger bank. You think of like Wells Fargo and Chase and all this stuff. Mm-hmm. And it ended up being completely opposite. That was completely wrong.
Right.
So maybe you can touch on that a little bit.
Yeah, sure. And I've worked for a large bank and much larger bank in a different capacity before, but the main thing you'll get with a community style bank is that we're reinvesting all of your deposit dollars here in the state.
Right.
And we have a couple of locations just outside the state in Southwest Missouri, but we're the guys that are going to be sponsoring your ball teams, paying for signs at high school stadiums.
I've seen your sign at the new Southwest High School right
yes.
here in that amazing basketball gym that they've got. I've seen your sign up there.
Absolutely. That was a big thing for us to be in the Southwest Little Rock community and do that sign too. And so we're reinvesting in the communities that we're in. Also, as a community bank, we're looking for partners, depositors, and people to loan money to that are wanting to grow with us. And yes, we like the larger loans as well, but we really want to be able to dial in to helping everyone from start to finish. And so the larger banks, they want the big institutional relationships with the state, the municipalities. They'll want the large industrial clients. Their profit margin is just better there, and they do some consumer lending, but for the most part, their niche is not small businesses.
Right.
And so we like to say that we really help everyone.
Right.
And that's from top to bottom. We have a community room in most of our locations that a lot of the people around the community use for free. As long as they have a deposit account with us, they use that. We want our clients to come in our branches, not just use our app, which we've spent a lot of money on technology over the last 5 years to make sure that's upgraded along with the larger banks too, because they usually kind of lead the way in that. And I think we've actually passed a lot of them up in that side too. And so we have a lot of different business lines as well. In addition to lending, we have our own insurance company. It's an independent brokerage company, and we have our own investment company too, as well as a trust department. So we have all these other business lines that add to the value that our customers have access to, that they not only come to us for loans and a place to deposit their money, but the other side of finances too.
Right. Yeah, and like with the, I like to pick on Wells Fargo because I've had issues with Wells Fargo previously. I think a lot of people have.
They do what they do good, but at this, I shouldn't say at this level, but at this type of relationship, they're not good at it. Yeah.
Right. Yeah. In my mind, I think I had gotten to a point where it was like, well, this is a sizable loan or refinance I'm looking to do. I was so ignorant to how a bank like First Community worked, and just thought that, well, the only bank that's going to give me a loan this size is going to be a mega institution. And it's so silly thinking back on it now. Like, to even a bank the size of First Community, I'm small peanuts, like teeny tiny, not a blip on the radar, hardly, But in my head, local banks were for car loans or, maybe like a HELOC or originating a mortgage, but then they sell it off to somebody like Wells Fargo, right? Yeah. That was just my misconception. Right. So I think I'm not alone in that. So I'm glad that we're able to talk and let people know that, hey, you can still get that personal touch. And honestly, it's going to be a better experience for you to go with that local bank, build that relationship, especially if you're going to be a real estate investor professionally.
Right.
The value of that relationship is really hard to quantify, but it's worth starting to try and build that as soon as you can, because it's better for everybody. The longer you have consistent deposits with the bank or whatever, the better that relationship gets. Right. The more y'all are comfortable with each other, then it's going to allow you both to move quicker when you need something. You need whatever it is. There's always a need for money. Right?
Sure. And the way I've explained it to my people who are just getting started, I kind of relate it to a train sitting on some tracks, still on some tracks. And when you get started, you have to turn the wheel slow and go with the pace of it. And I know a lot of times people are wanting to go faster and faster, buy this deal, buy that deal. They got access to capital, so they think they can move a lot faster. But it's really, you really got to take your time, get a couple years of income, get a year of income on your tax return, so we can see that you're making a profit, and then we pick it up a little bit more. We do another house, we do more houses, we do a line of credit. And next thing you know, you got the train moving forward. Because if you try to go too fast, those wheels will slip, and you're going to be back stopped again. And so that's kind of my analogy I use with respect to talking to new people getting started. And I'm happy to say that there's people I've helped before that are 4 or 5 years into the business, and they basically really had nothing at the start. We were able to work with them with just a little bit of a down payment, help fund the improvements to a house. Then they moved on to the next one and the next one and the next one, and then we pooled them together. They sold those off, had equity, and started over again. And so now they're in an equity position, and now they have a couple dozen properties and a net worth of a couple $1 million already. And and this was 3-4 years ago. So
yeah, it scares people to quote unquote like start slow. But what you don't realize is with starting slow, you build that foundation, and then it can scale pretty quickly.
True, and you learn a lot of the hiccups along the way while you're going slow. So when you make mistakes, they're not huge mistakes.
As catastrophic as
exactly. And so I mean, dealing with contractors, dealing with suppliers of materials.
The market fluctuations, the crazy
flow.
stuff we've been through the last couple of years.
Like 100%.
You could have bought way too many houses at like the wrong time, and all of a sudden bad things happen.
Yeah, that happened, in the 2000s, 2007, 8, 9. We saw a lot of people get way ahead of themselves. And I was a part of lending at that time too, and learned a lot. But the older guys at the time in the early 2000s were always cautioning, let's make sure these customers of ours have enough capital behind them before we move on and let them borrow more money. And some of them heeded that advice, and some of them didn't. But moving through that, it gave us a lot of perspective, especially when we get into a market like this and the rates rising as fast as they have. It put a lot of pressure on banks.
This episode of Hustle on Purpose is brought to you by Arkansas Real Estate Buyers. If you have a problematic piece of real estate, we would love to help you. Go to the description, click on the link, schedule a free consultation with me personally, and we'll get you set up. Now let's get back to the show. I tell people all the time, like when we're talking about, I'll help a client buy a house or like a personal home or something, make sure they get pre-approved and all of that. And it's like, I just warn them ahead of time. Just because the bank approved you for a certain amount does not mean that's what you should spend. Right. Because even I was shocked when my wife and I were shopping for our house, in our financial situation at the time, and like the lender came back with this number that I was like, we're looking at the same stuff, right? Like there's no way we should be approved for that much money and that monthly payment.
Exactly.
And thankfully we did not go spend all that money. We got something less expensive. But,
sure. Yeah. I got my background in lending, working in the mortgage side first before I got on the commercial side, and experienced a lot of that. And I work closely with our mortgage lenders at First Community too, in referring business to them and customers that I have. And you're exactly right. That game is ever changing though, and I bet there's not 3 months that goes by that there's not some new rule, law, underwriter change on those secondary market mortgages. And it's real important to have somebody who has experience to navigate you through that.
Right. And somebody that ideally that you believe has your best interest at heart.
100%.
And that's another thing about working with a bank like First Community, where it's like you can really focus on building that relationship, and you are hopefully avoiding having somebody just selling you the biggest mortgage they can, because it benefits them.
Right. And they price it that way too. That's going to be a way to benefit them.
Right.
Other than you, even though it's a friend, from high school, from college, from church or something like that. And it's good to have a relationship with a banker that knows what you are trying to accomplish in the end.
Right.
And
is willing to maybe not take the most immediate financially beneficial option for them.
Right.
And truly offer you what's best for you.
Right.
And what will hopefully be best for them long term, because the better you do long term financially, the better he'll do, and it
Right.
can become a mutually beneficial long term relationship.
Exactly.
But
yeah.
you
and
have to be careful when you pick your lender.
That's
is
right.
really just the word of caution we're
Yeah.
trying to get out.
Yeah, absolutely. I measure my success by how successful my customers are, not by how much I'm getting paid. And that's the biggest compliment to me, is when somebody comes to me later on and thanks me for taking them from A to Z and getting there. And that's what long-term banking relationships are for.
Yeah.
Yeah.
Well, you don't make it in your business doing what you do without, I don't think. I mean, sure, there are people that get away with predatory lending is a term.
Yep.
But just like in any other business, car sales or any kind of sales tend to have an opportunity for they can have a predatory nature there.
Right.
But those people just don't make it long term, because how you make it long term is you treat people right, you do the right thing. They refer people, though the people that you treated right, they flourish, they come back to you because they were treated right, and
Exactly.
that's exactly how you stay in your business you've been in for so long.
That's right. Yeah, and there are other lenders out there like me, and First Community in a lot of different markets across the country. Banking's a very highly regulated industry. I was at one time looking and about to give a speech to a group about fair lending, and I think there were like 40 different acts, congressional acts since the 70s on fair lending and what and changing things. They've needed to be changed.
Right.
There's rules in place, but and every year bankers go through a gamut of continuing ed about fair lending, about compliance, and luckily we have a really good compliance department that keeps us on our toes when it comes to that.
Right.
And we've got a really good back office team that does that.
Mm-hmm. Yeah, it's good because most of that, I imagine, if not all of it, is just consumer protection.
Absolutely.
Because this is a little bit of a tangent, but it kind of wears me out. We'll pass 40 congressional acts to make sure bankers aren't allowed to mislead consumers, but we won't have one congressional act that requires some financial education in high school.
Yeah.
Like I said, bit of a tangent, but wears me out.
Yeah, it's it's funny you say that, because that is another thing that we do at First Community is we're involved in high schools and going in and giving speeches about and lunch and learn type of situations with
That's great.
with
Yeah.
seniors in high
That's
school.
awesome.
Yeah, but yeah, there's not enough emphasis put on making good financial decisions, and people have to learn the hard way.
Right. I feel like I learned it all the hard way. And I look back and I have conversations with people my age now, early 30s. And we'll have conversations about, they want to get involved in real estate investing, or they want to buy a primary residence for their family or whatever. And we just start having a basic conversation about credit and financials, and you will have more experience with this than I will because it's not my profession, but you just get this deer in the headlights. Like you start talking about even my very cursory knowledge about lending options and stuff like that. And it's just deer in the headlights.
Yeah.
And then sometimes you have to have that unfortunate conversation with somebody about, well, really, like, you're going to have to start building some credit, and that, like, there's no real shortcut to it that I'm aware of. Like, it takes some time, and
Yeah.
you're going to need a down payment, and you can just walk through the whole gamut, and everybody's situation is different. But I'm just like, man, how many years of these people's lives could be saved? How much better would I don't want to get political about it, but how much better would the country be if everyone had at least a basic level of understanding about some of this stuff?
Sure, yeah, or at least paid attention to what was given to them.
Right. Yeah.
I do it all the time. I have people that maybe are good at their trade, a plumber, welder, they own a business, but they don't know how to keep books. Mm-hmm. They don't know how to create a financial statement. And it's something you have to walk people through so they understand what a bank's requirements are when it comes to how to document a loan and a loan relationship. And a lot of people don't understand that they have to give financial statements every year when you get a commercial loan. It's not just on the front end like you would a regular house mortgage loan.
Right.
And so we have to walk them through the process of creating financial statements and looking at what a net worth is and how you get to that point in that equation.
Right.
And so it's being community bank. We definitely have to do our share of educating folks that are just getting started, as well as those companies that are up and running and know what they're doing. Mm-hmm. And we have great products for them too. So it's almost like a jack of all trades situation.
Right.
Kind of like if you equate it to being a doctor, it's like a family practice doctor.
Right.
Versus
you can do a little bit of it all. Swiss Army knife of lending.
Yeah. Versus going into, I guess, mega bank, and that guy's he's a specialist surgeon that knows nothing about taking care of your runny nose and cold that you got.
Right.
But
and the mega bank is just bureaucratic, like is how I see it. It's like it's like going into the DMV and you're talking to the person mm-hmm. and they're just reading off the mandatory things you have to have off of a computer screen.
Right.
There's no personalization, there's no flexibility.
Right.
You're trying to have a conversation with them and they're like mm-hmm. They're like a robot. It's like, I just need these 4 documents so I can put them in this thing so that you can go talk to the next person.
Absolutely.
And there's no like understanding of, well, I brought this in last week, or like, I'm waiting on this, but I have an email that it's with the number you need. And they're like, no, I need the actual form. And there's none of that personalization and flexibility.
No. And I'm glad you found us.
Yeah, I am too. Well, and I was glad I was glad you didn't call me out by name. I felt like when you were talking about walking people through some of the stuff that's necessary, the annual reporting and stuff for mm-hmm. those commercial loans, because I'm always trying to learn and I'm always getting myself into new things, and having you guys with it's great that like I know y'all, I've met y'all personally, and like when I get an email from you, it's not just, I'm not having to like verify my account number every time. It's like we have a relationship, and it makes it to where we can, y'all do walk me through a lot of that stuff, and I'm like, okay, I have to get that together, because I definitely fall into that category. I think you mentioned like plumbers, where it's like you get into business because you have a niche skill set. Like mine's, if I have one, it is buying real estate and renovating it. What ends up coming along with that is all the unexpected stuff, and it's all the bookkeeping, and it's all of that stuff that is mm-hmm. super important, but I have a tendency to not be as on top of that as the stuff that I'm good at. Right. I like focusing on the stuff that I'm good at.
Sure. Well, that's why you lean on us for right. help with that. But it's like with me is, I see hundreds of projects a year. Mm-hmm. And if you walked me into a house that needed to be renovated, smelled bad, trashed out, and you see,
call me, I'll walk you through it.
You see opportunity. Yeah. And I look at it and all I see is, man, that's a lot of time and it smells bad in here. And that's all I could think about, because I don't have that creative mind like you guys. And there's so many people out there that have that, that I just have to trust that okay, give me a list of all the improvements you're going to make with detailed prices.
Right.
And we'll take that and get it to an appraiser, and they'll let us know what we think this house is going to be worth.
Right.
But I don't have that vision.
Yeah.
I tried it. I had rental property at one time. Absolutely hated being a landlord.
Yeah.
I did not like.
Did you like the financial side of it? You're like, man, this makes so much sense on paper.
Oh yeah.
But like the operational side of it is where it's like, this is.
Yeah, I didn't like getting calls to Sunday night at 8:00 to get a toilet unclogged. Right.
Well, and the stove always goes out on Thanksgiving. Is what I always talk to people about. I've said it before. It's like, I feel like if you had a graph, it's just the calendar year of when stoves quit working, and there's just this huge spike on Thanksgiving. Yeah. It's like good the rest of the year.
Yeah. It's kind of like a heat and air in about June.
Right. Yeah. Yep.
It all happens about then. But no, and like I said, though, I mean, and that's what I love and appreciate is there are so many people out there with that vision and that innate ability to be able to see a project and a profit by just walking in, and they just see, okay, this is this much, this is going to be that much, this is going to be that much, and that means I have to pay X for a house, and it's going to cost me X plus Y to fix it up, so Z is my profit here, and that way I can make a decision right there to do it. I can't. Personally, I would have to go back, put it on a spreadsheet, and then by that time, the deal's already gone,
right?
And because you guys have to act pretty quick when you decide to put an offer.
Well, that's where like the experience comes into play. Yeah. But it takes. I think the interesting takeaway from that is, even just in the small scheme of things, this little real estate ecosystem, it takes all kinds of skill sets and personalities and whatever. I mean, to make this whole real estate market flow like it's supposed to.
Right.
And like when somebody tells me they want to get into real estate, sometimes it's an education process on what their options are, because it's another thing that like I kind of fault our education system, because every 6-year-old either wants to be like a cowboy or an astronaut or a firefighter or whatever. But some of that doesn't really end when you leave high school. I left high school having really no idea what all kind of options are out there. And it's like, I thought the only way to get involved in real estate was to be a real estate agent. And I had done some sales jobs previously, and I knew commission-based sales I was not a great fit. And so I was like, well, I guess real estate's not really for me. I ended up getting a job for a real estate investing company. And once I was real estate adjacent and in real estate a little bit, you find this, like I said, whole ecosystem of jobs that work in real estate to make it work. And a lot of people, real estate investing, buying rental properties isn't the right thing for them. You have to have, there's your personal risk tolerance. I mean, the numbers can get really scary for people, and it's a lot of upfront work for very little immediate reward a lot of times. But so I'll tell people, even if all you can do at the time is get into a real estate adjacent job, that's a great starting spot, because you will learn a ton. Even if it's going to be a receptionist at a title company, you'll learn more about real estate in your first 2 months there than you can ever imagine.
Oh, absolutely.
Or whether it's some kind of job at a local bank, you'll learn so much of how the lending needs to work, and that can get your wheels spinning on how you can get that first property if that's what you want to do, or maybe it steers you away from getting your first property because you really like the lending side or whatever. But jumping into their first real estate investment isn't the right thing for everybody.
I agree.
Yeah.
Yeah. I totally agree with that. And we see people come in and talk and with us, and the first thing they say, okay, I want to buy an investment property, and they don't understand that. Okay, well, once you buy it, the work's just getting started.
Right.
Even if it's 100% turnkey kind of thing, and there's so many things you have to do paperwork wise, as well as staying on top of it, answering the phone,
Yep.
and dealing with tenants, and it is not for the faint of heart sometimes.
Right.
Some people are great at it, and some people just aren't cut out for it. But what's interesting, though, like you said, so many people start on one side of real estate or another, and then get into investment real estate, and that's a very good take on how to learn your way around the landscape, as you called it, the ecosystem of real estate, and from title companies to insurance companies to lenders. I mean,
Insurance, contractors,
buyers agents, sellers agents, inspectors,
property management,
appraisers, everything.
Right.
There's a whole gamut of people there that are involved in
home inspectors. There's a long list there of like great careers that are real estate adjacent, and you'll learn an incredible amount. Those are easy segues into learning the kind of stuff we talk a lot about on this channel, is like what assets you would target and why, and does it fit your short-term, long-term goals? And because I know hundreds, if not thousands, of real estate investors, and they all do it a little different. But they all make it work as well. There is no like right or wrong way to do. There's wrong ways. I shouldn't say that. There's definitely wrong ways.
Yeah.
But so let's say somebody has made that decision though. They feel like they've got the knowledge, they understand the benefits, because I would never want to crush anybody's dream. If you want to get into real estate, I think it's incredible. And it's a proven way to build and store wealth and provide for yourself, your business, your family, your community, all of that. Like it's so drastically improved my life that I want more people to be involved in it, because I think it's incredible. But all that to say, it's not easy. But if somebody has made that decision from a lending perspective, and granted, I know it's super situational, it's based on the person's finances and their goals and what they're trying to do. But what would you say are the basics to run somebody through maybe some quick options or things they could do to prepare themselves for coming to you to buy their first investment property?
Sure. Well, first of all, from investment property, you can have, is it going to be a rental property that they're going to buy and hold, or are they going to flip the house? Right. Or are they going to sell it on contract to somebody? So, I mean, that's, even at those three, let's just say they want to flip their first house. Well, they're going to have some residual income to be able to make those interest payments on the investment loan during the process, and they got to be able to make those payments while that's going on, and while the house is on the market too. And so the first thing we do is do a cash flow analysis of their ability to repay that. And the way we do that, we get 3 years of personal tax returns, and any business that they own at least 25% in. And so most of the time, somebody's just getting started. They've probably have a W-2 job somewhere else, and have a history, and so that's really easy to go and do. And we have a threshold that we go by that's pretty standard industry wide. It's called debt service coverage, and it kind of works as the inverse of a debt to income ratio. And debt service coverage is can be a minimum of 1.2 to 1.3 times their debt service coverage is what the ratio we're looking for. Okay. So their income has to be 1.3 times their what all their debt going out is.
Right.
And so, and that's for a business. And so we'll need 3 years of tax returns and a personal financial statement. And a personal financial statement is basically a balance sheet where you have your assets on one side and you list all those. And then you have your liabilities on the other side of the sheet and you list all those. And the difference between the two is your net worth.
Right.
And then there were some other personal questions about your income and then where your assets are located. And you sign that financial statement and date it. And that, along with your 3 years tax returns, are what we need to at least get started looking.
Yeah.
Most people want to buy a house in a company name to separate the liability from somebody slipping and falling or a contractor there getting electrocuted. God forbid that happen. But
and to have the taxes within that business.
Yeah, exactly. Yeah. And so a lot of people will have to create, if they're just getting started, create an LLC. And we will need a couple different things that we'll need a tax ID verification, an operating agreement for that LLC that says who can do business in that name.
Right.
And then also the verification with the Secretary of State in whatever state their LLC is registered. So,
and likely some form of personal guarantee from the person. Like, just because you're buying the asset under the name of the LLC, the bank's not just going to let this new LLC that's just been formed go buy a $300,000 house.
Right, exactly. So yeah, that is, and a lot of times I assume people know that, and
and they don't,
and they don't, so that personal guarantee at this level of banking is a must. I could count on. I may have done in all my years. I'm 52 years old. I've been in banking a long time, and I may have done one or two loans that are non-recourse, and somebody did not. They were strong enough to where the person didn't personally guarantee the loan.
Yeah. And so that's just an established business,
right? It was
that has lots of reserves
and capital of its own, and not any way that it could be shifted from one person to the next. And so a lot of times people will ask, okay, well, I'm the one doing all the real estate. My wife has her own business or she works and does that. Does she have to be on it too? Well, if she owns half your house, if she owns, she has a beneficiary on your life insurance, and she's beneficiary on your 401k where your assets are built up. She's going to need to personally guarantee it too, because assets can be shifted and moved, and there are things that can be done. So the bottom line, though, none of that means anything as long as everything goes well. And then when people's market goes bad, people start having problems, then they start worrying about, okay, well, who personally guaranteed this? And I can't think of one instance where a bank wasn't motivated to try to keep somebody in business and keep making those payments and worked in their benefit, because the last thing a bank wants to do is to have property back. Right.
Banks aren't built to hold assets like that.
Yeah, we do not want collateral back. We don't want.
They do a poor job at it. I mean, you see these like bank-owned properties, foreclosures, whatever. Like they're just sitting there, and they're on somebody's balance sheet somewhere. Right. And like it's a big headache for them. They don't want them.
That's right. And then there's companies that attorneys and collection companies out there that make a living off of collecting for those. Right. And but as a banker, I'll say this, that's the last thing that we want to do is to get in a situation where we have to try to work things out.
It's just like me as a landlord. It's like I want that person to live there and enjoy the home and pay their rent every month. Like that's what I want happening.
Right.
I don't want that person to like lose their job and need to move out. Like, A, that's bad for them and I feel bad for them. but also like I'm not getting my payments every month, and now I've got a house that I've got to go do something with. I've got to go fix it back up and get it rented back out, and like I take a hit on my income. It's a double whammy, right? Like I'm not getting the monthly income, and I got to go put money in it to get it fixed. And we all want everybody to thrive and be successful because it allows us to run our business the way it's supposed to run.
Right.
But so from a lending perspective, some of that is you and or your spouse likely need to have good credit, work on getting good credit. Both of you is just a good idea. You both need to save money for down payments in your business and out of your business to have it on the your personal financial statement. You need to have your job and keep it for a long time.
Yeah, until you've built up a big enough business to where you can service all that debt without your personal income and without from another job, I should say, and then I've seen some people be able to do that in about 5 years, somewhat quicker, but for the most part, they need to have that income from other sources when they get started.
Right.
We have resources to be able to help people build their credit if they don't have good credit. We actually on our app that First Community Bank has for all their personal accounts, we have a credit monitoring part of it that tells you exactly what your current credit score is at any given time.
Right.
And you can also play with it and say, okay, if I went out and bought this car, what is it? How is this going to affect my credit? If I paid this much for it and this is how much my payment's going to be, is that going to make my credit score go down or up?
Right.
And
don't do that right before you're about to close on a house because we've all heard the horror stories.
Oh,
it's like
sure.
You go to your lender and it's like, hey, I know we're closing next Thursday. I just quit my job and bought a new car.
Right.
It's like,
yeah, exactly. Well, there's one side of that. And the other side is, okay, if I get it over a 720, say I'm at a 715, if I get it over a 720, I get a better pricing on this mortgage. So what do I do? What do I need to do to get this over a 720? Well, sometimes it's actually put something on your card and buy something on it. And sometimes it's okay, let's pay this down and that down.
Right.
And that'll increase
too high.
Yeah. And so it's great to be able to have those tools and also talk to our mortgage loan officers that have that experience, that know what those ins and outs are of that.
Yeah.
So.
And all of that kind of segues into something else I wanted to talk to you about. So that's typically with the idea in mind that you're going to get a lower rate. So I would be mad at myself if I had you on today and didn't talk about interest rates, because it's been, I mean, I know you have to be exhausted from talking about it so much because everybody wants to talk about it, because it's just been such a wild ride the last couple of years at least.
Well, year especially. In March of last year is when our first increase in prime came to start staving off inflation. And again, let's talk about that, because that's the end goal and the reason why the Fed is raising rates. And let's also back up and explain that mortgage rates for secondary market loans are different from commercial lending rates. Mortgage rates are based on loosely on what prime is and what the Fed funds rate is, and when the Fed increases rates, it's loosely associated with the mortgage rates. So yes, they both increase at the same time, but at different speeds. Sometimes mortgage rates go down and Fed funds stays where it is. But
and I just want to touch on that for a second.
Sure.
So is that my understanding of some of that is there's a lag time oftentimes from when the Fed raises the rate to when you actually see it affect mortgage rates, because it's that lag time is kind of a measure of how long it takes the bank to lend out the money they already took at the lower rate.
Sort of.
Is that a terrible way to?
No, well, yeah. I mean, I'm definitely not an economist, but from what I know, mortgage rates are based on the 10-year bond yield, and there's only about less than 10 people out there buying mortgage loans. And so you've got your originators of loans, some large banks that'll hold them in-house, and some that are just there to buy loans from correspondent lenders that are smaller lenders. And so they all end up at the same place, and they pool them together of similar credit scores, maturities, 15 years, 30 years.
Go watch The Big Short.
Yeah,
it explains.
It's exactly
the
that.
Jenga. It's Ryan Gosling with the Jenga with the double A's and the.
Exactly. And so mortgage rates are based on a whole different theory, but the way the government, the U.S. government, affects inflation, one of their tools is raising the overnight Fed funds rate, and that is what affects what we call prime. And so, for instance, if you have a bank that has, let's say their average loan portfolio or bond portfolio that they have is, say they're getting 5% return on that. So that's pretty standard of what was going on before the rate started to go up. Okay. And as rates increased, banks had to start increasing what they had to pay on deposits. And so banks make money on the spread between deposits and loans. And so as we have to increase what we pay for deposits, we have to increase what we pay for what we charge for loans. Right. And so in order to maintain that spread. And so when interest rates moved so quickly, so fast, we still have banks out there that are paying 3 and 4 and 5% for deposits for CDs, and their average loan portfolio, even though they're booking loans in the 8-9% range right now, their still average loan portfolio is only at 5% or 6%, and so
very low margin.
So the margin is squeezed right now, and so that's why you see a lot of banks struggling at this point, but you see other banks who continue to be strong in that, and we're definitely one of those. But banks have to stay out in front of that. So right now we're doing loans in the, up there pretty good in order to stay ahead of it. Prime is at 8% right now. Wall Street Journal Prime is what they have it. So
where does that put y'all at? Because it's obviously there's a spread above prime.
Yeah, it depends on the deposit relationship, and so because of this situation, every relationship is looked at based on what, not only how much they borrowed from us, but how much they have on deposit with us too. And so the more they have on deposit with us, the better pricing that they'll get in relation to prime.
Right. And so start building that relationship with your local banker ASAP.
Yeah, build a relationship with a local banker, keep your money in that bank. Yeah. And even though we don't have banks on every corner like some of them, they're even closing branches right now. We still have all the gadgets, the apps, the access to it. And
it's all going that way anyways.
It is, yeah. But we still want you to come in our branch, and come see us and build that relationship, though.
Y'all's new building out there is awesome. People should go check it out. Do the tour of the new facilities.
Yeah, we love it. Customer cafe in there, free coffee, gourmet coffee, as well as a smoothie machine in the lobby. So kids really love that. Yeah,
and the green wall. They've got a big. I don't know. I just call it the green wall.
It's
plants,
but live plants on the wall.
Yeah, it's pretty cool.
It makes it nice to be there. Great place to work. Really fortunate that our leadership has invested in our market here in Little Rock, and First Community is only 26, 27 years old.
Wow. That's impressive.
And then we've built it up from just a little over $1 million as the bank opened to
Wow.
2.4 billion. So,
incredible. I can't let you go either without asking if you have any like crazy horror stories you can tell. Maybe not horror stories, but like I always like asking, because in real estate, I mean, just in business in general, you run into just like some crazy people and crazy stuff happens.
Mm-hmm.
I don't know if there's anything you can share without getting too specific.
No, and that's fine. And probably the first thing that comes to mind is something happened when I was investing in real estate.
Oh, really? Yeah, perfect.
So I think we had a little over 10 at one time, and I started selling them off.
That's awesome.
And
A bit of a headache.
we moved out of town, out of Little Rock, for about 5 years, and I had a local property manager that was managing the properties for me. And what I did not realize is that there was a fee to manage the property, and then there was a fee for them to go in it and manage it and actually go in and see the property, and that cost extra. And I didn't know that.
Right.
They called me, wanted me to meet them at a house that I had that was vacant. And I get there and the roof's sunken in one part. Yard was in disrepair. I mean, it had obviously not been managed. And
Right.
we walk in and the smell was outrageous, and mold in the bathroom, and obviously somebody had been living there without
Right.
power or water for a while.
Yeah.
And opened the refrigerator, and there were 3-liter bottles full of water that they were getting from the neighbor's hose next door. And I was like, well, how did it get like this? Why weren't you over here?
Right.
And that's when he told me it cost extra for them to actually go check on the properties. And I was like, you got to be kidding me. But
Right.
luckily,
Oh,
my wonderful mother-in-law, who's an expert at real estate too,
Awesome.
she came in and looked at the property and was like, all right, it's going to cost you this much to fix, and we can sell it for this. And we ended up doing that and got out of it okay. But but that ended up, what was interesting, it was the last property I owned, and it was the first property I'd bought. And
Really?
so, and it was a really good deal in a good residential property neighborhood, and ended up getting out of it. But that would be my horror story, is that there's no such thing as passive
Right.
investment when
Right.
it comes to real estate.
Yeah. You touched on a really big misconception. It's like that it's just going to be mailbox money. And there are real estate investments that are more like that.
Make sure you know what you've signed up for, though.
Right. Yeah. It takes, I even having some experience, have fallen into the trap of like, I'm paying a third party management company. That's something I don't have to pay that much attention to, because these are people that I've met with, I trust. They're handling all of this. And I go focus on, like before, the stuff that I'm good at and I enjoy doing and what pushes the needle forward, so to speak, buying houses, renovating them, adding them to the portfolio, all of that. And then you look up and it's like, oh man, like I have to really spend a big chunk of my week managing the management, because no one's going to care about it as much as you do. They have a lot going on. The squeakiest wheel gets the grease. And you really, even once you get to the point where you're hiring a management company, you have to be on top of them and managing, even if they're good, you have to manage them more than you would think that you would need to.
You do. And that was my fault, in that I assumed that the level of management they were doing was a lot
Right.
more than what it was.
Yeah.
And I can't fault them for that. But it was
a learning experience.
At the time, I really did fault them for it, believe me. But and it just goes back to know what you're investing in, and know your parameters at all times when it comes to that.
Yeah.
So,
and luckily you had an exit strategy there that worked out for you, and it's all fine.
I got really lucky. It was a softer point in the real estate market, and was able to get it to where it was really wanted, and we had somebody come in and buy it. So
Awesome.
it worked out fine.
It worked out fine.
Yeah.
Good. Was there anything we missed? Anything we didn't talk about?
Man, I don't think so. We pretty much hit on everything.
Yeah.
Again, I love what I do. I love getting people to the finish line, and getting them started. And again, the measure of a good banker's success, I think, is the success of their customers. And so that's what we believe at First Community Bank. And that's why it's been a great fit for me, and since I've been there for almost 3 years now. Yeah.
Well, I'll thank you. You've been an incredible help for me and in my ongoing journey, and I look forward to continue building our relationship, because I plan on being in Central Arkansas real estate for as long as I can be.
Right.
So my relationship with you and the way you've helped me grow has been incredible. So can't thank you enough, and can't thank you enough for coming out today.
Oh, you're welcome.
Reach out to Randy Jones at First Community Bank if you're in the Central Arkansas area. He'll at least be able to point you in the right direction, even if he's not the best fit. But with all the stuff they offer at First Community, I think they'll be able to help you with whatever it is you need, or get you started on your journey, whatever that journey looks like. So Thank you all for watching the Hustle on Purpose podcast, where we try to bring you the knowledge and encouragement you need to better serve yourself, your business, your family, and your community. Look forward to seeing you next time, and go out there and hustle on purpose.